Well, hello everyone. It's April 13th, midweek update. Joe with you here on a Wednesday going into a holiday week. I'm going to make mention of that because I was in the middle of doing something earlier and completely spaced that tomorrow's the last day to close out our options, folks, for April expiration because the 15th is Good Friday. The markets will be closed. And on top of that, tax season for you guys that are, on top of things like I am, we have until Monday to file taxes. So I put two of those together. But since I hope everyone's going to go out there and enjoy the holiday, just keep in mind, folks, that we have to take care of our options today and tomorrow. Let's get into today because we got some. Actually, I expected this type of market action just based on the overall pattern. So, folks, let's discuss some stuff. Let's share some ideas and take responsibility for the outcome. Okay. All right. So, real quick recap. So the markets show their first signs of bearish reaction to inflationary data. You've heard me tout about this on Thursdays and Wednesdays for weeks. They just don't seem to care. Gas is going up higher. There's problems when it comes to the supply chain, yada, 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 but the markets don't seem to care. Well, this is the first time we saw a little bit of reaction. One of the Fed chairs came out, was pretty hawkish. That started things, but the PPI and the CPI numbers come out. They're higher. There was a few other ones. I can't off the top of my head. Last week, the end of last week, they're also higher. So nothing's getting better. There's discussions about, hey, this could be the peak because, of course, when you get these numbers that shoot up as high as they did, we'll take a look at the CPI because there was a couple CPIs. It was a year over a year that was actually higher. Even though this month was actually lower than expected, it's still an increase, and we're still at a 8.5% level, which is just too high. But the PPI today, I think, is technically being shooken off because it was high, 1.4 versus 1.1. So nothing's good there. But it was interesting to see the market's first reaction to it. However, let's get to the technicals because it might just be a standard corrective move. So sentiment, it's difficult to read. Money continues out of the tech and into defensive. We've seen this ever since this little move off of the bottom a couple, mid-month last month. So it's been quick, it's been aggressive, but I didn't see anything panic-induced. I didn't see a spike in the VIX. I did see a little bit of a climb in it. However, it wasn't panic-inducing. So I know that money's continuing to stay in the markets. They're just moving out of the tech, and it's more of the same. We are seeing, energy move higher, the defensive stocks move higher, and some of the more aggressive stuff kind of fall out to the wayside. So that hasn't changed at all. Economic data is inflation remains high, Fed increases hawkish outlook. There's really not much to go. I'm just kind of rolling with the exact same thing that I've been talking about for the last few weeks. So let's take a look at some trade ideas. These are from last week. I pulled a couple from CoinRob as I always do. And I would like to take a look at them with you. NUE was one that we had together, and it's a beautiful little ascending triangle breakout pattern. I didn't have it here because it seems like it's a little bit past a good place to get into it. However, if you guys want to take a look at it and maybe jump into something of a diagonal or a targeted butterfly, be my guest. I liked ENPH here because it appears to be in the middle of a pullback. Now, it is below its 20-day moving average, but that would be healthy for a nice pullback. So if you guys believe that the markets are going to continue higher from this point, and we'll make that argument here in a second, if I can get my pen to draw, there it is, then this would be a nice little pivot point that it's trying to establish. Now, it hasn't done it yet, so keep that in mind, and we only have another day for this to really trigger if you want to get into it before the holiday and extended weekend. The cool thing about this, or what I think is going to be interesting to see, is I thought tomorrow was going to be our Easter weekend rally. Now the day's not over yet, folks. I did expect a little bit of a relief bounce, but I did expect it to be tomorrow. So it'll be interesting to see how we finish. So be patient with this. I would have maybe confirmation above 200 for a move to the upside. I think would be a pretty cool trade. Good old T-Mobile. It's been up a few times. Now, folks, I believe that we had this up as a breakout above 300. I think we did. Like was it last week, 2 weeks ago? Anyways, it did do that. And what's the first thing it does? Is it nice and healthily pulls back, retests the 130. Did I say 300? I said one. I meant the 130. Sorry, folks. A break above 130. It's retested. Now it's pushing the 135. So if you got into this above the 130, it pulled back. You've sat through it with a diagonal spread or a butterfly. You're looking pretty here as it's moving up towards that 130. Or if you took it when it hit the 135 target, that's great. But it looks like it's setting up for another trade to the upside. So I do like it. And I do like stocks that set up, breakout, set up, breakout, set up, breakout. So that's kind of neat. ABBV was one that Corey had been doing that for a while with, although over the last couple of days, folks, it's not looking so good. But it could be just a round of profit taking, which is very difficult to figure out these markets because of that. We're seeing some of these very aggressive stocks that have been really well, getting scalped here, getting profit taken out of them. Doesn't mean that they're falling apart or they're going to be bearish trends. However, when we do see the markets gap aggressively to the downside like they have, I don't want to say a spike in volatility because it wasn't. Just a little bit of an increase, but it was volatile in its movement, then you will get some of these corrective actions. It doesn't ruin the chart necessarily, but it does take away from confirmation, and it might take away from our targets, which is kind of a bummer. It's like, hey, I was expecting to get to, in this case, hey, I was expecting to get to $34, but it gaps down to 32. Now it's going to take more than 2 weeks to get to 34, so on and so forth. So that's what I've been seeing in the markets as of late. With that in mind, I do like some of the sideways here. Dish has been on our sideways watch list for a while. It's hold on. It came up, kind of bumped its head on the 32 mark. It looks like it's going to roll back down to 30. For you guys that are doing iron condors or butterflies, this has been really good, and I think it's going to continue that way for a while. Keep your eye on earnings. I know that we're just starting in earnings season. I'm not sure where this is in the list, but keep that in mind, along with sympathy trades. So anything in its sector. Here's KDP, Dr. Pepper, right in between, kind of a choppy area of 39 and 37 respectively, moving sideways. I believe Rob talked about this, or was it Corey the other day, but it still looks really good, just nice and tight and consolidating. If you guys want to jump in and throw something out sideways over the weekend. Now that might be kind of a cool thing. I know expiration is actually tomorrow for April, April's expiration. However, going into May week 1, that might be kind of fun to get into this today or tomorrow and get a cheap day or two over the weekend, right? And then we'll see what happens on Monday. So now on the bear side, I thought this was interesting. I went through a list of bears. We had a bunch, and I didn't really like any of them. We had Home Depot from last week. Yeah, I think it carried over from the week before. But I do like how it's behaving here below its 20-day moving average, kind of a sideways, could roll over. If there is indeed a squeeze or slowdown in housing, an increase in demand, but lower supply, prices increase, it's going to be hard to go to the Home Depot and get that piece of lumber that's now 4 times as much you got to wait 6 weeks for, right? So I imagine home improvement projects are, at least my neighbor's actually trying to build his fence on the other side. And it's been a bear for him just to get the lumber. And, because he and I actually built our fence about 4 years ago. And it's about a third of the cost is the one that he's building right now on the other side. So I just keep thinking, hey, if that's going to kind of play forward, this might be something to play sideways to down. All right, there's my theory on top of a chart. So let's get into the market data here and see what we have, because it's pretty interesting. So the market performance overall, Dow, the S&P, Q's down, but taking a look at how far down they are, the Q's still getting smushed. Now, it did have a pretty massive move to the upside off of the rally that we've seen over the last few weeks, or last month, I should say. But it's giving the majority of that up pretty quick in chunks. That's the volatility I'm talking about, not necessarily fear, but just chunks, gap downs. Yesterday we had to move higher and it just completely failed. I mean, we didn't close very low, but it failed. And today it looks like we gapped lower. We're moving higher. So it's been choppy. It's been ugly, but it's still holding true. The Dow's holding in the strongest. The S&P's in the middle and the Q's are still the weakest. So nothing's really changed even from the performance of the rallies that we've seen since then. Isn't that kind of crazy? So keep that in mind. The Russell, pretty weak. Oil, reactionary. I'm just going to leave it at that based on inflation, fear, worry. I do think that oil might come down. We've seen some countries open up the reserves, which could inundate a little bit of flooding. So I'd be surprised to see that number come down. And then gold. Gold is moving higher in conjunction with the dollar. Now, usually they go in opposite directions. However, I do think that there's a little worry or a flight to safety outside of some of the bonds or the yields that we've been seeing. These yields are increasing quite a bit, and rates are really kind of ahead of what is really happening with the Fed. They're already pricing in 7 rate hikes. Well, not that many, but it seems it's going that way. So it looks to me that the dollar should be moving higher, but to see a bump in gold, that might just be a little short-term reaction. We'll see if that kind of smooths itself out. All right, enough of that. Let's get into the charts. So chart-wise, guys, let me go back to the SPY. It's a difficult one to read. We had this beautiful downtrend here, and this is, when you take a step back and take a look at things. Consolidation, move off of that 420. This 440 mark was huge. The 450 mark, still pretty big levels for the SPY here. The thing that really helped, I believe, these markets off this bottom is the surge up to these levels. If this would have turned even at the 450 mark, this is a complete different feel, a complete different chart. Now, it is bearish, right? This is just technically kind of a double top in an overall sideways, which could be a downtrend. But where it's sitting at this 440 mark is significant due to the fact that it turned at the 460, not the 450. What do I mean by all this? Well, the gapping that we're talking about is right through here. I should erase this and start drawing again. This is the corrective gap, so on and so forth. The volume not very bearish, or I should say very high. It's more of people stop buying things or continue to move out of tech and into defensive, not enough, so on and so forth. But where it's at this 440, this could be a pretty significant bull pullback. Yes, I hate to say it, but it could be. Now, it is below the 50. It is below the 20-day moving average, and it is below the 200-day, actually. Slightly below the 20. Now, once again, I took this picture about 30 minutes ago, maybe more, so that might be changed. But how I have to chart this is going to be a little different than I want to when I'm charting this whole move, right? And the reason being is where this pivoted is very significant because, folks, this can be a higher pivot low. Not saying it is. Going into a holiday, I'd expect a pretty happy surge. Maybe we finish on highs, we bounce up, and maybe we threaten up this 200-day moving average. Now, out of the next week, we could see it roll over, so on and so forth, and we're right back where we started. This is why I believe, even in Sunday's trading room and yesterday's roundups of the last couple of days, it's a difficult market to kind of get an edge on. Very difficult, because there's just so many different places that could go. I don't like how this corrected so quickly, so fast. I just feel that the floor could fall out at any moment, but nobody is selling it. It's just a lack of buying, so it drops, and then people come back in and buy it. How do I know that? The VIX. The VIX didn't spike to 35, 40, 50 even, is what you've heard me tout that number before. That's real true fear. That's real flush out. That is people getting out of the markets. This isn't. So we'll see. All right, so I spent the majority of my time talking about that. Let's briefly talk on the SPY chart. So let's talk about the diamonds here. A little stronger as it did rear its head above its 200, and it's pulled back a little bit more shallow. This could actually hit the 340 mark and turn. It doesn't look like it wants to do that yet, so we'll see. But once again, this is the strongest of the three markets. Now the Qs, on the other hand, had a pretty great corrective move off the bottom. That was substantial. And this is something that's been punished. But you can see, out of the three, it's given the majority of it back. And it is at a reverse head and shoulders pattern, right? So it's still a quote-unquote bullish trend if this turns here and it actually starts to go back 350, 360, 370, so on and so forth. So it's crazy because I'm seeing a little bit more +1 in these charts than I'd like versus the overall trend that we've seen since the beginning of the year. All right, so there you go. Hopefully that just confused everybody and didn't help anyone. Doesn't mean that there's not good trades out there, folks, because there really are. So let's get going. So what's in the way? Well, this is the first thing that I noticed that spooked the markets this week. The NFIB Small Business Index dropped a little bit. Confidence had dropped before. Once again, I believe there was an inventories number. It was last week. I forgot. It's one that the Fed looks at for inflationary gauges, and it was high. But the CPI, 0.3% versus 0.5. Now, that's from month to before, so it's lower than expected for the month, but it's still at an 8.5% versus an expected 8.5 year over year. And even the quarterly was higher than that. So CPI is not slowing down, but today's PPI number, folks, I think it was interestingly enough shrugged off. 1.1% to 1.4%, that's production price is increasing, which is going to come to the consumer, which we already saw was higher. So we'll go. Now, retail sales tomorrow could be something. If we see the consumer slowing, that actually might take the pedal off of inflation. If the consumer is not slowing, if retail sales are high, then this is not the peak. It can't be. So we'll see about import price index. I know that number is going to be higher. We'll go from there, business inventories, so on and so forth. So, and we do have some economic news on Friday. Hopefully you guys are not watching it. I'm not going to be because the markets will be closed. But we'll see what happens over the week. All right, so let me pull the class and see where you're at when it comes to your outlook. I actually believe that Sunday we were a little bit on the bull side, or I should say bull side. And then even by Monday and into Tuesday, we kind of rolled from +1 down to -1. And it was a lot to do with some of the movement that we've seen in the markets over those few days, because they did drop and corrected pretty decent. But once again, you saw the tech there. They're not full bear. They're not full bear yet. All right. So let's see what you guys are thinking about. Let's roll through some of the comments. Okay, guys. Let's see. Wait. AMD shorts. Oh, hey, Ian. All right. I'll see if I can get through some of that. Let's see. Okay, cool. Nothing, just some trades to look at. Okay, so pretty much what I would expect, especially over the last couple of days. So let's go ahead and close the poll and share. Now, we only had about 86% vote, which is fine. I mean, it's going to be difficult to have an opinion right at this level. 89% pretty much zero. 39 to the upside, 22. That's pretty much flat. Yeah, so you guys are basically a 0 to a tiny +1. But I'll just give it a 0. All right, thanks. So let's get to my outlook. Now, as far as charting goes, I kind of had to do that versus, putting a little bit of your gut into it. I try not to do that. You guys know that. So on the monthly outlook, it was easy, -1. And -1 is because we haven't pivoted yet to set the higher low. We could at any moment, and I believe we might. But if that pivots there and then we hit 450 and roll over, all of a sudden that -1 stays where it's at. On the weekly side, I had a 50-50 shot. And it was one of those things where, do you think we're going to get a relief rally today and tomorrow, or do you think this actually rolls over and breaks some of these levels to end the weekend on a little bit of an ominous note? I'm going to say I don't think that we turn here and shoot up to 450. I think we struggle a little bit and maybe slide lower. So if we give up the gains today like we did yesterday, it's going to be easy for me to be the -1. If we can stay with this nice green candle and going into the holiday Thursday, we have a nice green one, well, then I'm going to wish I said +1, because the pivot point would have indeed confirmed. Isn't that funny? So -1 on Sunday to +1 on Monday and Tuesday, and I'm going to say I'm either -1 or +1 for the next day and a half. That just shows you how difficult these markets are right now. That being said, let's get into the sector analysis, because what is weak is staying weak, and what is strong is staying strong. So the overall markets are very difficult to read but the overall sectors themselves are really hanging in and staying true to what they are. So far this week, this is where we have it. Industrial is pretty much flat. Remember, folks, these numbers might have changed in the last 30 minutes. Communication services just getting a smush still. Energy leading the way with materials. Technology, second weakest. Isn't that crazy? So consumer, folks, the 1.15 number, and I always disclaim this. In fact, I might want to add another thing to this chart. This is the consumer cyclical. The consumer defensive was actually the third strongest. It was up just below materials. All right, so there's that. So let's take a look at the strongest and weakest. Energy. What's really cool about this is your longer term versus, hey, I'm going to buy every pullback or breakout high base has been working. And it's been working since the beginning of the year. And it's kind of interesting because this has gone absolutely opposite of what the markets have been doing since the beginning of the year. Which means, since the beginning of the year, the sentiment of sectors hasn't changed. It hasn't. Still bailing out of that risky tech that's done very well over the last 6 years, 5 years, and moving into the defensive stuff, worried about the future and inflation, so on and so forth. So it's still there. It's right in front of you, isn't it? All right, let me erase this. Now let's go over to the bear side. This is comm services, communication services, and it is rolling over. It's a lot, I wouldn't say a lot weaker, but it does show a lot more signs of weakness than the overall tech side itself, the Qs. And the reason being is because I like the move that it's put in. I like this crossover here. I like the fact that it's already broke above that 68 mark. Now it could easily turn around and move higher and we have the same situation. But even up in this area, it didn't quite come back all the way up to 672. I guess semantics wise it is close enough, sure, but it didn't. And it was just a 2-day little blip if you take a look. It gapped up, moved over, and then it gapped right back down. So that's kind of the true pivot point here, just above the 70. So it's still showing some signs of weakness. Decent volume yesterday on the move lower. It's just a nice place to be if you want to be bearish. Plain simple. All right, let's get to some trades here. Those are last week's. I can just erase those and we'll put new ones up. So, real quick conclusion. The markets are back support levels. There you go. There's my first typo for the month, or at least the first one that I noticed. They're back to those support levels, and it's interesting because it's an overall huge rally, but that rally was so big it actually put us above some substantial resistance levels to continue that bearish trend. All of a sudden, we're in a situation to where this could be the first higher pivot low. So the corrective move has been aggressive and volatile, not on the VIX side. Look at sentiment. VIX did not move higher, but it's well below the panic levels. But we've seen gaps, we've seen gains fail, so on and so forth, stuff like that. And I think it's just the reaction or the step away of people wanting to buy. There's no fear in it. The money's still in there, and so the sentiment is going to be defensive and cautious. That's all I could come up with. It's not scared. It's not bearish, it's not bullish, it's not aggressively bullish. It's just defensive and cautious, but no money's coming out. Inflation remains high. I left that same one, economic data. I'm not changing that until something changes. So we'll see. The first time we've seen the chink in these markets' armor has been this week. First sign to reactive to news. We'll see if that continues or not. All right. Enough. Let's go out and take a look at the markets. Okay, get rid of my pens, ink. All right, so not much has changed. A little bit of a surge, though, this morning. And once again, I would expect this after the last couple of days. I don't know if it was going to happen today or tomorrow. We'll see if these gains hold. It could change a lot. Look who's leading the way. Once again, it's just a bounce. I knew this was going to come. It was almost predictable after the sell-off that we've seen a little bit. And what's bouncing? The ones that have been getting smushed. So we'll see if this holds. Okay, let's get out to some trades here. Adam's got PayPal. Okay. Got a 100, 110, 120 butterfly spread in May. I'm going to have to zoom in on that. All right. There we go. Good. Wow. It's a pretty big mover. 100, 110, 120 in May. 6th. Okay, so a little bit, couple of weeks here. Gap down today. We'll see if it can turn. If you bounce off 100, you're in a pretty sweet spot. This is one of those difficult situations. You've got 140 here. It looks like it wants to be bearish. However, right through here, well, sideways. If it could hold itself on 100 and move up back to 110, you might be okay. The gap down this morning was kind of a kick to the butt. But Adam, I think you're okay. Good thing about a butterfly is you can really plan on that, or absorb it. I say based on just the position. As long as you didn't pay too much for it, it should be all right. Let me put it down as sideways, and we'll see where it goes. Now, folks, on the other side of things, if you believe that gap down is going to continue, a break below 100 would be a nice entry point to the bear side. Not for Adam, but for anybody else that wants to do this, right? All right, cool. Thanks for sharing. Let's move on. Matt, still playing with the wheat. Is this a new one, Matt, or is this your same vertical spread? If done now, net debt somewhere between 90 cents to 95 cents, 2-to-1 risk reward. Looking at a $10, $12 vertical call spread. Well, technically it's above the 11. If you're gonna do I would tighten that. 11, 12 if they have that. I don't know if they've got an 11 and 12 and squeeze it. I mean, if it's up today, it was up yesterday. It's above that 11 mark. If you want to vertical spread this thing through the 20th of May, I would squeeze it. The last thing you want to do is give it 10 to 12 and have this thing finish somewhere in there. Just, I'd rather risk more to gain a whole heck of a lot more and play somewhere up in this area, right? That way, if it finishes somewhere in this area, you're going to be making a pretty decent profit versus if it's just going to peter off. So keep on that. Let me put it down. We'll keep an eye on it. But unless there's not dollar strike prices, let me scroll down. They have an 11 for 90 cents as well. Okay. Yeah. Yeah, run the numbers on that. I'm doing 11, 12. That'd be, if I, just be a little bit more aggressive. And once again, there's my personality, folks. I'm big into high reward, low risk, medium probabilities. There you go. Especially if I have to sit through something for a few weeks. It's easy to know that you're risking $1 to make 4 or something like that, right? Not in this example, but I think you get it. All right, thanks, Matt. Let's take a look at what you got here, James. ANN, AutoNation, and AMD. Sure, both breaking below $100. Oh, very nice. Yeah, okay. Too busy reading your comment versus looking at it. Okay, very nice. Retest the 100, still into any bounce. I trade a long put in AMD yesterday. Let's take a look at AMD. So I like AM. I'll write that down. AMD. Shorted yesterday, quick in and out. Probably looking for the same early next week. All right, now another break below 100. It's nice when these things break support levels, and they both look really, really good. Really, really good. In and out, that's fine, James. I know that James is more of a shorter term player. And actually, see if we can get you working on some longer term. I believe we're going to have a conversation coming up here soon. But yeah, I like them. Great trades. You're in, you're out. It's done. For anyone else, these are still great for continuation down to 90, I think, over the next 3, 4, 5 weeks. Just depends on what you guys want to play with it. ANN as well. AN as well. Excuse me. It's a tongue twister. All right. Let's move on. All right, Ian, I'm going to do my best here. Ian just sent me a book. So let's take a look at AMC. First off, diagonal put. Okay. 15, 18 and a half. That's going to be the best I can. 15, 18 and a half. Okay. Excellent. I mean, I can zoom in on this, but I think you guys get it. 15 is going to be right in the middle there. Boom. Okay. Boy, that's interesting. Well, maybe I should zoom in here. When these things have such a huge move, it's very difficult. It squeezes the chart pretty aggressively. So, yeah, 15 is a good target for that. I like it floating below the 20 mark. That's cool. Diagonal's really sweet. I like it because it can absorb if it's gonna monkey around that 18-20 level and then roll over and hit 15 later. I like it. So bear. I'm gonna keep this a little simple, Ian. If you don't mind, I'm just gonna go through strikes and where they are. If you guys want to take a look at the expiration dates, just go through them because they have a bunch. Here's cat. I'm probably going to miss a couple of these. I apologize if I do. This is cat bull call on the 22nd of April, 215, 227 and a half. Okay. 227 and a half. Probably, I'm going to imagine that's probably right there. Right? Yeah, it's 225, 220. Yeah, okay. Like it. Let's do that as a bull. Wait, AMC. Sorry, guys. I put that on the bull watch. It's not a bull. It's a bear. CT. Okay, let's go to... Who's next here? Okay. GILD. I think I got that right. Yeah. Okay. Sold. 14th April. 65. 61. It appears to be a diagonal, right? 61. And sold 15 April. Okay. Diagonal calls. Okay. Diagonal call spread. Okay, yeah, if it pivots. Sure. Now, once again, if this is indeed... I would wait for it to pivot a little bit, but I like where it's going. You know, it's a nice breakout 3 days ago above that 62 mark. So I imagine, you know, where you're at here, the 64 makes sense. And yeah, I mean, if it pivots, let's put it down. It's going the right way. Let's just, if anybody wants to wait a little bit, just wait for it to pivot first. But it looks good. Let me do this just to triple check it. Yeah. Yeah, I like it. Okay, so these are GOLD. This is going to be, he said, I believe he said that these are all diagonal calls. Okay, good. All right, gold's a good one. Sold the 26 and a half, bought the 24s. Great, awesome, awesome. 26 and a half, right where it's at. Bought the 24s. It's pretty sweet. Rob's a huge fan of selling at the money. Although, you know, you might have put this on a little earlier, Ian, and it's climbed in there beautifully for you. So this looks great. I love it. I love the ascending triangle pattern on it. Everything looks good on that one. All right, let's do a couple more, and then I might have to jump down and get somebody else's stuff. Okay, what do we got here? CCG, I believe. All right. I think what we should do here is maybe have GoToMeeting set up old guy font, or maybe I should just increase my font size. CCJ, thank you. Let's see, sold April 26, 32 strike, 28 strike. Let's get rid of those. 32, 28. Okay. Right at it. Right at it. This thing broke out last week, didn't it? Right there on the 7th. Boom. Nice one. Ascending triangle pattern. Very nice. Looks really good. Well, let me get this strike again here. Sold 22nd of April, 32 strike. Okay, so you've got some time left in that 32, and that's fine. If you can sit there, you'll be all right. All right. Targeted butterflies on SWN, I believe. Second strikes 8, 8.5, 9. Okay. Ooh, cool. Look at that. 8, 8.5, 9. Wow. That thing's really just surging up there. Pretty cool. And you're at the 22nd of April as well. Okay, so next week. You only got a week from tomorrow. It's not too bad. I like it. It's pretty extended, but it's cool. Especially for a targeted butterfly. I mean, that's all you're looking for is just to park at the butt somewhere up there and you're fine. All right, let's get to XOM. And I think I made it. I might have made it through your whole list, Ian. Okay. What do we have on this? We got 84.90 diagonal put. Yep, I like it. Plain and simple. Plain and simple. Your expiry on that is the 22nd. Okay. And then what are you buying in the back? Oh, there's Mara. You've got one more. I'll take a look at that. Oh, it's a vertical spread. Thank you. April 22nd vertical spread. Good. Right at it. That's a nice one. And then let's do MARA. All right, guys. Sold the 22nd April 19 strike puts. Bought the April 29th 25 puts. Okay. Oh, this needs to be zoomed in on. Okay. Diagonal put spread. 19, 25. Okay, right at here, down a little below the 19. Probably right around that area. Okay, just kind of playing a tight little roll through that. All right, let's keep an eye on it. All right, we made a marathon. The reason why I was able to do it this time, Ian, is because I only have a couple more to look at. Two more for, I think, Sebastian. He's got OXY. All right. 27 May, 22 April, 57.63 diagonal call spread. Hoping to sell multiple calls if it continues to stay under 63. So if it's going to fight here, he just wants to sell one after another after another. Awesome stuff. Cool. Like it. OXY. Alright. Let's move on. Well, let's get to Ben. Speaking of that, Sebastian wanted to give a shout out to Ben, his new trading buddy. See, it's always good to have friends, right, guys? Get together, start to talk, share ideas. Let's take a look at this. LEN. This is, let's get to it here. 77, 71.65. Okay. Let's see, 71.65. You're down here somewhere. Okay, so 71, 77, right where it's, yeah, right about where it's at. And then see, I'm going to probably somewhere down in that area. Targeted butterfly. Okay. Don't like green candle today, but needed to add more bears in case of the market fall. That's fine. It's a good one. I like it on the bear side. It's a nice bear chart. Doesn't matter if it's I'm running out of ink on my pen already. Doesn't matter if it's bullish today. It's having a bounce. Same with the rest of the markets. Cool. All right. That's a May 6th expiration, by the way, folks. Targeted butterfly for about two and a half weeks, right? 2 weeks and a day. I keep forgetting that expiration is tomorrow after the close. Jeez Louise. All right. Cool. Well, let's take a look at how we ended. Thanks. Got a good list there. I know it wasn't from everybody participated, but hey, I was able to get through the list. Excited. So, let's have you take a look. Yeah, these markets just seem like they're gating another push to the upside. Haven't seen a real test of the bear side today yet. We'll see if that comes. You know, yesterday was quite a different market. It it started high and it just slowly bled off the whole day. And so we're getting pretty much the exact opposite of that. Is it CAF? Boy, folks, I hope I don't have any typos here. Gotta be. Where was that? Sorry, folks. I'm just double checking some things here. Yes. Okay. Cool. So hopefully, you guys aren't going to be doing too much of market action tomorrow. Sounds like you might be, but if you want to get a trade in before the holiday, fine. But please, if you don't need to force it, don't. Especially if we don't make any sense tomorrow. If whatever we go to today, I mean, if we end up really high today, I don't see why we don't fall through and actually create that pivot I was talking about. However, if we don't, and it's another head scratcher like this week has been for pretty much Rob, Corey, and myself, then it's sitting on your hands is fine. All right, there we go. I believe I got all those. Okay. All right, guys, this is what I got. And I'm not sure about, is it CAF? If somebody wants to correct me on that, please go right ahead. It's one of the first ones I was looking at. I'm just seeing which ones it was, but if not, that's what we have. All right, guys. Thanks so much for joining me. Appreciate it. And have a safe holiday. I'll definitely be chiming in tomorrow for the end of day, but past that, guys, I'm kind of tailing off here, especially if we close this higher and confirm that pivot. I might have to switch to that +1, even though I was -1, right? So let's trade those markets in front of us. Thanks again, guys. We'll talk to you next time. Bye, everyone.